The credit market's resilience was probably the big takeaway over the volatility of the past 2 weeks. You saw markets, the volatility index, the VVIX, certain parts of global equity markets set new post-financial crisis records or even pre-financial crisis records. Actually, credit spreads didn't even come close to their median or the average over the post-financial crisis period. So I would say the takeaway is that credit held in better than other asset classes, all things considered. And actually, we saw better buying on the little bit of widening that we did have, and we've at this point retraced, depending on the asset class and the rating, around 50 to 75% of the widening that we saw. I think there's a lot of kind of focus on the resilience of credit spreads and kind of why this is happening. Obviously, lots of well-telegraphed reasons for that in terms of sector shifts and the composition of the index rating shifts. But one of the points I think that's actually not discussed enough is that just companies are staying private for longer in this new cycle. And by the time they actually issue into the public markets, they're larger and more diversified. And so that's why credit, we believe, is holding in better.
How much credit risk do you want to take? I mean, I consider it a two-year treasury where I'm happy to hang out at 4% here. Yeah. How much credit risk do I want to take?
We like taking credit risk. I think one of the actual interesting things, and you can see this on the Bloomberg intelligence data actually on the terminal, margins for high yield credit have been improving over the past few quarters, which is a bit of a counterintuitive result.
What does that mean? What is margins for high yield credit?
So margins for your high yield index, you have the LF98 high yield index, LUAC IG index. Actually, in aggregate, the margins for the high yield universe have actually been improving. So in this kind of era of focusing on a higher cost of capital, a slowdown in the economy, you would not expect EBITDA margins.
How many basis points, how many percentage points do you pick up on a high yield Amanda Lynam piece versus full faith and credit or some AAA Microsoft debt?
So the spread, the actual spread on the high yield index is around 338 basis points over treasuries.
Yes, 3.38%.
But actually, when high yield investors are deploying, they're focusing more on the dollar price and the yield. The yield on the high yield index is around 7.55%. So that's a meaningful cushion in terms of when you're actually deploying capital in this credit market, that you're able to earn a pretty attractive all-in yield. In IG, for comparison, that's around 5%. We've seen significant demand for IG at 5.5% yield, so we're slightly below that given the rate move. But in general, I think so long as you expect trend or ideally above trend growth, and we're actually there, we're at above trend now, that's actually a pretty supportive outcome for credit.